Cross-border is getting faster and more trackable, but delivery still breaks in the last mile. In this episode, we compare rails, card push, real-time payments, account-to-account, wallets, and stablecoins, and get practical about what actually lifts straight-through processing, improves time to cash, and makes costs more predictable for enterprise use cases. My guests today are Damien, who's going to talk about pay addressability and verification, and Hiro, who's going to talk about corridor operations and alternative rails. During this episode, we separate hype from production reality so banks, fintech platforms, and remitters can choose the right rail for each shop. Hiro, let me start with you. When you look at payment corridors around the region and indeed globally, what does good look like in 2025 in terms of the flows, time to cash, straight through processing percentage?
Yeah. When we speak to customers, the top three things they want is speed, transparency, and cost. Right. So good is definitely close to real time, or if not real time payments, close to mid-rate type of FX rates. And obviously, I think where the funds are when you're making the transfer are probably top three things that you want to look for. And that's what a good cross-border payment, in my view, is in this day and age.
Where can we find that? When you look at Asia, we have so many different choices, so many different rails. Where do you think we've achieved a good scenario? What corridors?
It's a good one. I would like to also break this down to B2B and B2C. Right? There's been a lot of development and evolvement around B2C retail type of payments. You look at the typical players like Wise, right? They've sort of pioneered the netting off flows, which as a result allows cross-border payments to be done close to instantly at really good rates as well. But then you look at B2B, right? Has the B2B cross-border payment space in terms of infrastructure, is it at the level of where B2C is? Maybe not yet, right? But there is a lot of improvement, right? And especially I think when it comes to the region, which I'm very more familiar with, anything to do with Singapore is probably better because Singapore is not a controlled currency. So when you're looking at where good payments or good transactions happen, I feel, at least I've seen, anything to do with any payments to do with Singapore is probably a good one, right? Either Singapore inwards, Singapore outwards into a Southeast Asian currency. But when you look at, let's say, rupiah to peso, I think that's where challenges still are, even for right. B2B and B2C.
Interesting. Damien, would you agree with that assessment?
Yeah, and I was also about to say that we have to differentiate low value, which typically would be B2C, from high value, which is more B2B. Yeah. I remember when I was at Swift before starting iPiD, we were looking at the different players and we could clearly see a tipping point where banks become actually more competitive than the likes of a Wise. So if you go for $50,000 payment from Singapore to Indonesia, probably your bank will be more efficient than a Wise, right? But it really depends on what kind of payment, what's the currency, and then the definition of goods is different. And the second thing that I would share maybe is I remember talking to banks and fintechs in terms of what are the innovations that they're bringing and what's the real return on investment that they're seeing in terms of more flows, more customers, and so forth. And very often, the highest return on investment was not so much on having a better rails from a fee or speed perspective, but it was more about improving user experience, improving the trust and safety that the clients had as they were transacting. So I think we also have to add now that layer of value-added services on top of the money movement itself.
To a certain extent, I guess some of this is just table stakes, and then it's differentiation on top of that, I guess. That's one of the things is like so many different rail choices right now. Damien, when you look at kind of the delta between, say, 2025 and 2022, 3 years ago, is it in terms of rails or availability? Is it data standards? Is it operational design? I mean, what do you think is the one concrete improvement that we've seen with cross-border payments, specifically in Asia, I guess?
Yeah. So in terms of, so I'll mention maybe one improvement and then a new problem that has appeared. I would say in terms of improvement, it's mostly around adoption. I think players like Wallex and Wise and so forth, and Tuned and Neum have been around for a long time, but it really took time for the industry to start using those new rails. But now we do see banks, mainstream banks, actually using alternative rails as well. So I think what has really changed is more adoption of these new payment rails. But on the flip side of that, as money moves faster, we sometimes like to say that fraudsters and fraud also comes faster. And so scams and fraud has definitely become a much, much bigger problem in 2025 versus 2022. I was looking at some stats, and apparently Singapore, on average, a citizen in Singapore is losing around $4,000 per year due to scams. And that was not the case, I would say, before COVID, for instance, and before the wide adoption of instant payments. So that's a new problem.
And that's the highest in the world, right? If I'm not wrong?
Yeah, I think exactly.
Yeah.
So they call it the scamdemic in Singapore. So it's a real problem that has to be solved.
And sorry, if I may add on the point of the banks, what's changed between 3 years ago and now is that the banks have also caught up on this real-time payment infrastructure where now you can open your, let's say, Singapore banking app, scan a QR code in Malaysia or Indonesia and make a payment, right? And that was, I think, non-existent 3 years ago. Yeah, so they really kind of caught up on that.
Yeah, I guess the challenge in that, though, is the economics. Because I was in Thailand a few months ago and I gave that a try, the Pay Now Prompt Pay interface. And the rate that you get for, when you add in the fees and the FX and everything else is not particularly amazing compared to like a traditional credit card. And I think, most of my credit cards are US cards, so they don't have, they have the 1% spread from the Visa or MasterCard, but then for the most part, it's no foreign transaction fees. Singapore credit cards a bit different because they really stack on those fees. But it was actually better to pay with a card than it was to use Pay Now, Pay La. With the prompt pay integration to send the money. It's instantaneous and you can see the exchange rate right away. So that transparency, like you were talking about before, was there. But I think, I guess, are there particular rails, Hiro, that in certain corridors are better than others, right? I mean, we have the basic rails across every corridor. So you have the SWIFT rails and correspondent banks across every corridor. And now we have, the bilateral integrations and eventually Project Nexus that will kind of bring in multilateral integrations around some of these systems. But in your experience, what's an example corridor of where, say, a digital wallet as compared to a traditional payment is better?
Right. Once again, speaking on the market that I know best, which is ASEAN, right? I've seen that ASEAN adoption on really beefing up their cross-border payment infrastructure over the years, right? And I think paying into wallets have become quite prominent when we first started off because the banks didn't have that digital capabilities, right? The banks did not have their QR code scanning payment method. But now, if you go to Indonesia, all the banks have kind of improved their digital presence as well, right? So now instead of having to top up into a wallet and then making a QR code payment from that wallet, you can now make a QR code payment straight from the bank's app. So in that sense, I feel that one of the more prominent usages in terms of cross-border payment rails are just directly to the banks, where prior to that, because you couldn't make QR code payments because it was not useful, you would generally make it to your e-wallet in that country, right? Either the Philippines or Indonesia, GoPay. But yeah, now, I think payment directly into the banks and using the bank's digital app to make your local payments has become quite prominent. So I see that usage increase over time.
Was there a particular instance that you can think of yourself personally that really changed your mind about that? Maybe the first time that you used a QR code or made a non-traditional transaction with these platforms?
Yeah, so previously when I would travel to Indonesia, right, because BCA's digital banking app did not have QR code payment capabilities, I would need to transfer directly into my, let's say, GoPay or Dana. Or previously, when that capability was not there, you transfer into your bank first and then make a transfer from your bank to your wallet, right? But now that's gone anymore. You can just transfer to your bank and you can use your DigiBank app as if any other e-wallet service provider in the country. And I think that's kind of translated across the region as well, given the recent digital adoption of the bank.
Yeah. How do you think, Damien, coming to you on this, how do you think things like Project Nexus, assuming that happens in the next couple of years, how will that change the nature of cross-border payments? Because the thing that strikes me is that we have, although they're developing it, it's an idea that's been in play for a long time. And, arguably your previous organization, Swift, has done a lot to facilitate cross-border payments. We have bilateral, we have stablecoins, we have all these different choices. Is it maybe too little too late with Project Nexus? Or how do you think that things like this real-time payment, multilateral are going to affect things?
So I'll come to Project Nexus in a moment, but maybe to comment on lived experiences and where I think what works well today comes from. So in payments, usually the innovation starts at the domestic level. And cross-border is essentially a plug-in on what works well at the domestic level. So you pay to wallets in the Philippines. Why? Because Gcash is prominent in the Philippines. But you would not really pay to a wallet in Singapore because we're all using PayNow and we're using our banks for that. So I think we need to see what works at the local level, and then typically the usage for cross-border will be based on that practice.
Makes sense.
And so I travel quite a lot to Malaysia for personal reasons. And indeed, I usually don't have cash, or I don't want to have cash anymore, and credit cards are not very prevalent. And I remember seeing the evolution of how easy or how difficult it was for me to pay. So 5 years ago, basically my wife had to pay for me, which was convenient from a financial point of view, but
as well as practical.
Basically, I was not able to pay with my Grab wallet or my Singaporean banking app. Then somehow Grab enabled a multi-currency wallet, which was great. So I could just use my card to top up my Grab wallet in Malaysia, and I could then use the local QR code. For some reasons, I think they blocked that recently. So now I'm using my banking app, indeed. So my Singapore PayLah app to scan in Malaysia. But interestingly, if I'm not mistaken, PayLah is not using the bridge between PayNow and Do It Now. I think they've built a proprietary integration with Do It Now. Because every time I've tried to use my normal DBS app to scan the QR code in Malaysia, it has never worked. Same in Thailand, by the way. It seems that it worked for you, but I've tried several times. It never really worked for me. So I think even operationally, there have been some hiccups. So Nexus, I think Nexus is great because it will help to create more standardization, discussions on rules, compliance, and so forth. I'm not sure we need necessarily a new pipe, because if you're a DBS, you can already use your partner bank in Malaysia, in Indonesia, in India to do instant disbursement in those countries. So I'm not sure that that's where the real plus will come from, but bringing people around the table to agree on, do we need to screen those payments? What are the rules that we use to screen payments? I think for that's great. That's the real value that I see.
Let's get into that a little bit more about verification, because that's a lot of what you're doing on a regular basis. And where do you see the challenges and opportunities in Asia for better verification? Because not, as far as I'm aware, not many countries have mandated anything around that, but certainly it can help. I mean, maybe you can talk about where it can help, and then some stats that you might have about where it has made a meaningful difference, either to an organization or a country or a payment system.
Absolutely. And the reason why we started iPiD 3 years ago was because we felt that so many companies had already brought a lot of innovation to the rails themselves. And so we felt that we needed to bring the intelligence and the value-added services on top of the rails, because nobody was really doing it well at scale. As we started on that journey, so our mission was to prepayment give the possibility for a customer to have certainty that the payment will succeed and the payment will reach the right beneficiary. And so that's why we build basically integrations all around the world with schemes, with partners, so that we can offer a single API to the likes of Wallex. We're lucky to have Wallex as one of our customers.
And we're a pretty big beneficiary. I think 25%, 3%
yes.
reduction in rejected payments.
Wow.
Yeah.
And that was a very simple project, I think, for both sides. So now if you go in the Wallex application, basically when you create your new beneficiary, you will have that real-time verification. So you will know whether the account details that you've provided are correct, and also the name checking. So you know that you're not the victim of fraud, essentially. So that's a real benefit. And you were wondering whether maybe in Asia it is mandated or not. Actually, we are pretty well served in the region. Indonesia has a pay verification system. Malaysia has it. Thailand has it. Vietnam has it. Singapore does not really have it, actually. But most countries around us already have. India has it, and so forth and so forth. So I think we've been able to provide direct quantifiable benefits to our clients because we could tap into all these existing infrastructures that existed around the world and especially here in the region.
Right. So you guys are kind of bringing that together across cross-border to facilitate that and help with that.
That's correct.
And just I think it ties into the whole customer experience, right? Because a rejected payment due to incorrect beneficiary details, at least for us, used to be the number one, I think like accounted for like 80% of the reason why payments rejected. And in some cases, these funds are stuck for like weeks. It's somewhere lost in Swift universe. We don't know where it is. And that just gives a very, very bad customer experience, right? So being able to verify the payee beforehand at the point of beneficiary creation reduces that significantly and obviously overall gives a much more pleasant customer experience on our side.
Kind of think of when you install something on Microsoft and it says it goes to 8% and then it sits at 8% for 3 minutes and then it jumps to 80% and then it's there. And then think, wait, can't you just get it more accurate? Can't you tell me where we are in this process? I guess that's one of the things like platforms like TransferWise do a reasonably good job on. And I think the last couple of, I use it for both personal and business, and it gives you if it doesn't say instantaneous, it'll give you an estimate and say, oh, it should be there by 7 a.m. on Friday or whatever the case may be. Do you think, I mean, I guess open question for both of you, but for Hiro to start, like, do you think we're just at the tip of the iceberg of what's possible around this? Because, I mean, you have the initiatives like GPI from Swift that, are designed to help with that. And then you have innovations coming from the third-party players itself. Do you think that accuracy and the data richness that we'll have around payments will increase? Oh,
yeah, absolutely. Right. I mean, given on where we have come since, let's say, 5-10 years ago to where we are now, maybe another 5-10 years or so, we'll probably be able to track payments to the second or to the minute on where it's at and on how or when it's going to arrive to your beneficiary bank. Yeah.
And I think one of the new challenge that we're seeing is that there is a fragmentation of payment rails, and then there is a fragmentation in tracking capabilities, essentially. So if we were all using Swift for payments, then you only needed Swift GPI, right? But the fact is that now most payment provider will have their own tracking service. And so that's part of our vision to also be that abstraction layer for the different tracking capabilities, tracking service of a Tunes, a Neum, a Swift, a Wallex, and so forth, so that it doesn't really matter at the end of the day who's moving the money. You want to have standardized tracking, ETAs, quoting, verification services, and so that's that layer that we're building at iPiD.
Is that, how realistic is that, considering the attitudes of the providers? I mean, do providers have APIs that you can tap into to be able to track these things?
And so actually it's easier to get that from indeed a Wise or a Neum. They would have a quote API, they have a tracking API, because that's part of the services that they typically offer to their clients. But the problem is that if you are a fintech and you need to integrate with multiple partners, because you should not be only relying on one, then you have 3 types of tracking services, 3 types of getting a quote for your payment, and so forth and so forth.
Do you think for, financial institutions that are increasingly looking at some of these third parties, that will be a differentiator of who they'll pick? If they're going between a Visa Direct and a TransferWise for business, and like traceability, will that be a key differentiating? I mean, both of those is probably a bad example because both of those have it, I'm sure, but do you see that as a differentiator in the future?
I think 100%. Tracking, verification, just in general, the all the value-added services on top of payments are becoming a way to differentiate. That's why the likes of Visa Direct and so forth, what they're telling us is that payments is becoming a commodity, so we need to invest in the on top, basically.
But I mean, Hiro, much like you've said, payments are a commodity. Wouldn't those value-added services be a commodity as well? I mean, what are the kind of economics that you could look at around that? Can you charge the end customer for payment verification, or and what was your experience with that when you guys, or is it just the economics remain the same for the customer and it's just seen as a value-added service that people might use Wallix because they offer this?
Yeah, that's good. But I mean, when we were building out Wallix, our primary goals was to get the customers to use us, right? And the initial hook would either be, once again, kind of going back to the kind of three important things: speed, transparency, and cost, right? And when we were trying to fight over customers who were kind of going to our competitors or trying to snatch them back into using us, it wasn't really the value-added service that made a difference. It was really, once again, going back to the customer experience, and then the three factors that I mentioned, right? I think the value-added services is nice to have, but I think the key reasons why customers choose you is really cost, customer experience. It boils down to certain things. Yeah.
Right.
Yeah. At least in my point. Yeah.
I mean, the one thing that is kind of the elephant in the room around all of this is stablecoins now, and how that will affect those three pillars. I know, Hiro, you guys have been working with stablecoins and looking at stablecoins. How do you see them changing the calculus around cross-border payments?
Eventually, I think in order to stablecoin to become more popular as a use case around cross-border payments, there needs to be more adoption on the end user, right? Even though, let's say, our client wants to send stablecoin, but if the supplier doesn't receive it, then there's no use case, right? So I think there's need to be a little bit more infrastructure, a little bit more adoption on the end user side of things. Now, when it comes to cost, I still think cost of using stablecoin is still on the higher side. Not the cross-border element of it, but the on-ramp and off-ramp part of it, right? Where you can use. When we make a, let's say, large transfer, $1 million, 500,000, we can do it at 8 basis points around there, something like that, right? However, you do the same amount with a stablecoin. Yes, the actual transaction costs 10 cents, but the on and off ramp fee, including also the FX, which is done probably off chain, it can go up to a percent, right? 1.5%. So it's still relatively expensive. So I think those costs need to go down. I know some guys are working on to do that. But yeah, I think it's still a fair bit of way to go until wider stablecoin adoption for use cases around the cross-border payments.
Damien, would you agree with that?
Yeah, no, I don't think it's a fair comparison to say I'm moving USDT from Singapore to USDT in Indonesia versus I'm moving Sing dollar to IDR, right? One is sort of a closed loop, and you don't have effects, as you mentioned, right? So if you really wanted to compare the two transactions, you would have to say it's a Sing dollar to USDT and then USDT to IDR, on-ramp, off-ramp. And probably the latter will be potentially more expensive than the former. Is there a case for people to want to hold USDT or USDC? I guess potentially there is in some markets because it's basically a virtual US dollar. I think many people would like to own and to keep virtual US dollar, and today they cannot, right, because of regulatory reasons. I guess this is the case of Nigeria, Colombia, and all those markets. But also there is a good reason, I guess, why the regulators don't want them to hold US dollar today. So why would they be allowed to hold USDC, USDT at scale? We still need all of that, I think, to kind of have the regulatory blessing so that can really rescale. But I'm kind of impressed with how fast stablecoin has grown. To me, it says two things. One, that people want US dollar, and And today they can't because of regulatory reasons. So the banking system does not allow people in Nigeria to just have US dollar, or like a regular person to have US dollar. So there is a demand for that. Is that something that the industry wants to facilitate, and how? That's a real question. I'm not sure that if Nigeria issues a stable coin for the local currency, that the Nigerians will jump on that opportunity. They want to own US dollar, essentially. That's the product market fit. The stablecoin sandwich, a bit like what we've described, so having local currency to stablecoin and then the other local currency. It seems that there are still use cases where it does work, and I guess it's because maybe the FX is more competitive than using the actual US dollar as a pivot currency. Then it becomes really a liquidity and an FX problem and opportunity, I guess.
Do you see more of a use case for stablecoins just on the back end for settlement?
What seems to be really interesting, I mean, I hear real use cases of corporates, even traditional corporates, using stablecoin to move, I don't know, $50 million on a Saturday from Japan to Paraguay. And that's not really possible today through the normal banking rails. Or even, I don't know how Wallex manages that, but if you are a PSP and you need to have liquidity suddenly on a Sunday in a country, it's difficult to use the traditional banking rails to do that. So I find that quite interesting, that part. So I see three use cases that are still remains to be proven. Liquidity management, treasury management use case. Actually owning as an SME or as an individual, owning the stable coin. Or third, as you say, purely in a back end, instead of using, I guess, the US dollar as a pivot currency, you use a stable coin as a pivot currency.
You know what I'm quite interested in, if this stable coin adoption works out, automated account receivable and account payable, right? This is where, let's say I'm a seller or buyer. Actually, so I'm a buyer of goods, and then I want to buy something from a seller. Seller, seller issues an invoice with a click of a button. It direct debits from my account and direct credits. Now, in order to do that, you need to have that kind of infrastructure capabilities from the banks, right? I think on a domestic level, some banks do have that. But if these businesses and banks starts building up USDT, USDC as their liquidity management, probably can be done more on like a smart contract basis, right? So I think that is an interesting use case, at least that I've been thinking about, that might make this automated ARAP service plausible. Right? Because I think that is one of the kind of pain points around SMEs, keeping track of invoices, keeping track of these ARAPs, and automating that, I think, is a big problem you can solve.
Yeah. Once you have that in place, I guess that would be the argument behind CBDCs as well. In certain cases, is the smart contract element.
And it's programmable money in a way. I mean, it's an interesting concept. How do we make that happen is another question, but I think programmable money is, and like tokenizing money is also an interesting concept. I've been quite impressed with the take-up of stablecoin in the past 12 months.
Yeah. Another key element of this is data. And we talked about a little bit about, payee, the verification of data on the payee side and kind of the transparency around where the payment is. Damien, what else is missing from the data side of things? I mean, we have this tremendous opportunity in theory with ISO 20022 to shove more data into every payment that goes through. What do you think are the key things that are missing there that you would like to see? Specifically in cross-border payments to really, facilitate better STP and success in...
Yeah. I think what is key is to bring as much visibility and certainty upfront. So if you pay to India, you know that you will need a certain purpose code, and there will be a regulatory obligation for the receiving bank in India. So if we can bring as much of those requirements to the sending party so that they know exactly what has to be provided. And we can also simplify it for the sender. If they have to provide an invoice, then maybe you actually just upload the invoice and then you read all the information from the invoice instead of asking the customer to copy-paste 50 fields into a payment instruction. I think a lot has to be done in terms of bringing more context from the beneficiary country upfront to the sending customer. I don't think the bottleneck is really the format. I don't know. It's just a bigger envelope, essentially ISO 20 or 22. But if you don't have the correct requirements and guidance for the sending customer, having a bigger envelope doesn't really help you.
And I think I know the answer to this, but who's going to provide this? I mean, who's going to provide that?
Would love to help.
Yeah. Is there anybody that's doing it now? Is there anybody that has any examples that you can see in the marketplace of somebody who has any banks or anything that?
So nobody's really, I mean, I think you're right. Wise, for instance, has spent a lot of time on user experience, and everything for me that we do around value-added services, the objective is to improve user experience and then to also give better data for banks and for fintechs to do risk scoring, fraud prevention, and things like that. So I think the likes of Wise have made that much easier, basically. But it's again, it's a siloed initiative. Nobody's really doing this in a payment rail agnostic way in the industry.
Right. So would you agree on the data side of things? I think would that make your guys' life easier in terms of facilitating cross-border payments?
Yeah, especially I think it's great that Damien brought up the example in India, because that's definitely one of the corridors that we have a lot of trouble sending payment into, even though we try to educate the customers, right? And once again, I think it's different in each different country, but I think having some sort of standardization would definitely help.
Yeah. Damien, maybe can you talk a little bit about a bank that you've started to work with in terms of success that they found in using P verification and some of the data services that you guys are providing? What did it look like before, and what did it look like afterwards, and how did you working with them kind of help?
Yeah. So the main tangible and visible difference for them was basically when their customers were creating a payment, creating a new recipient. Before there was no validation, and now you have a traffic light. So now, as a customer, you'll be able to see not only that the account details are correct, but also you'll be able to see a green tick next to the name or a warning if there is a name mismatch. And I think that's a very visible benefit and trust-building factor for our customers. In terms of numbers, we've heard indeed clients that told us that they've managed to identify and prevent fraud. So one case is a half a million payment that was, so it was a fraud. It was an obvious fraud. The customer was creating the transaction, and thanks to a service could identify that the name was not matching, and then they did not press send on the transaction. There was an SME. So that's one case. And on preventing failed payments, Hiro has shared some numbers, and we see indeed between 25 to 75% of prevention of failed payments.
I mean, you're obviously using this solution as well. I mean, you mentioned before you saw a 25%.
25, 30% improvement on rejected payments due to incorrect beneficiary details.
Okay.
Right?
Have you seen kind of similar stats around fraud and challenges around that?
So fraud, I don't have the data on my side. I mean, obviously we do have our fraudulent monitoring tools and so forth, but I would say data sets would be equivalent, right, on improving to prevent fraud. Yeah.
And if I remember well, in the analysis we did with you guys, we also saw that the number of support cases related to... That's also a big benefit.
Yes, because investigating a failed payment, once again, takes a lot of time. So that's it's a good great benefit to us internally as well, to not having to investigate those.
I remember my first failed payment was when I moved to London, and I was sending some money home, and this was 1999, I guess, and sending it just through my bank, and then it went missing, and I had to do my own payments investigation, which took quite some time and was probably not as expensive then as it was now, considering my salary at the time. But it was still, from a time perspective, it was quite annoying. And
it's a stressful experience. I mean, we're experiencing it at the moment. So we sent a payment to Malaysia to fund our Malaysian entity. We made a mistake in the big quote, wrong big quote. And it's a funding. So, I mean, it's a reasonably high value payment, and I'm stressed, right? Because the money is gone, and we could have used our own service to verify it, but we did not. So the bank that we're using should be implementing our service by the end of the year, so then we'll feel better. But it's really not a great feeling not to know where your money is and whether you'll get it back, right?
That's
Yeah.
true.
Yeah, it's amazing to think about it. I mean, it's zeros and ones sitting on a server somewhere, but it can be critical for businesses or individuals around that. Let's talk a little bit about regulations. I mean, I guess probably the most significant regulations around cross-border have been some of the stablecoin regulations that we've seen, like the Genius Act in the US and MAS and Hong Kong Monetary Authority. How have these regulations, have you seen, maybe we'll start with you here, how have these regulations affected your partners and the people that you work with? Has it changed their approach or anything that they're thinking about in terms of cross-border, or is it too early to tell?
That's a good one. I mean, I think for us, the regulators, especially in Singapore, has always been quite open in terms of new innovation, right? And they're quite, also, how do you say it, eager to let new players try new things out as well, right? Maybe a little less so in other parts of the region. But saying that, I think the number one blocker for adoption is, in my perspective or in my experience, has been the banks. Right? Even the regulators give you a green light to do something. It really comes down to who you're banking with that will either, let you do it or not, right? So we'll see how these changes in the regulations or how regulators view things like stablecoin and so forth get kind of trickled down and see how the banks, feel about how they do business with PSPs like us, because money service operators in generally is high risk.
Yep.
Right. So it really depends on the relationship you have with the banks and how comfortable you can get them when it comes to conducting your business and so forth. Yeah.
So it's more about the banking partners than the actual regulations itself.
So on stablecoin and the recent regulations, I feel it's very much about preventing non-credible, non-legit issuers. We don't want customers to get scammed, basically, and they thought they bought a coin, but actually it's not backed one by one.
It's never happened, right?
Exactly, right? So I think that's great that we're doing that. I'm curious to see when some governments and central banks will wake up to the risk that it potentially creates for their own monetary policy and so forth. So I think for the US, that's great. What's happening today, the more stable coin, US dollar stable coin is being used and issued, the better that is for them. And, it's covering their debt and so forth and so forth. But if you are BSP in the Philippines, if you are the Central Bank of Colombia or Venezuela, I think you might actually see that as a real threat because today, what they're all trying to do is to get as much money back into the country. And they're forcing the banks and the corporates to essentially park the US dollar at the central bank and then buy the local currency so that they can prop up the demand for the local currency. So that's why remittances are so important in all those countries. What if that stops? What if now the money stays in a blockchain in a USDC that is basically, government treasury in the US, right? So what's in it for BSP? What's in it for all those central banks? And at the end of the day, money is power, money is politics. And I'm wondering when some of these central banks and governments will actually say, I'm at risk potentially.
What can they do to a certain extent, right? I mean, like if you look at some of these places like Argentina, for an example, I mean, there was a black market in physical US dollars that, you can send the police around and crack down on all of these things. But at the end of the day, I mean, I remember an experience that I had when I was living in Shanghai before is they had these, what they call yellow cows, huangnyo, that come in and exchange money. And so we go to this cafe and there were two guys that would come in with their relatively large man purses and would sit down and they'd go out every 10 minutes to smoke a cigarette. But then there would be people that would come in and they'd exchange, they would have Hong Kong dollars, Chinese renminbi and US dollars. And that would be they would just sit there and exchange money all day, right? So, I mean, was that good for the renminbi? Probably not, because it's outside the system, obviously. It becomes even worse with a stablecoin, right? I mean, it's a lot of risk, and there's not much they can do about it.
Well, I think Hiro gave the answer to that. The banks are the answer, because if you don't have a bank to do the on-ramp or off-ramp in the Philippines, then Like if eventually you need to buy something in the Philippines, you will need the blessing of BSP.
Yeah.
So if the banks say, we don't accept it, you cannot transfer money to an exchange, right? I think they can block it. I would think they can.
Yeah, I guess it's the fiat has always been the blocker on the crypto side, and then, stable coins as well on that, or the block or the control point, I guess.
They could also block merchants, I guess, to accept, stable, right?
Yeah.
The merchants are based in Manila or somewhere. They can definitely tell them not to accept crypto.
Let's go on to, before we kind of wrap things up, I want to go through a kind of a lightning round. And so I'm going to ask you guys some questions or some statements. You tell me very quickly if you agree or disagree with this. We've talked about some of these before, but front end versus back end, Hiro, stablecoins in 2026, is it going to be rail or just for settlement?
Rail.
Damien.
Both.
If you could mandate, this is for you, Damien, if you could mandate one ISO 20022 field or status code globally tomorrow, what is it?
I don't think we should worry about ISO 20022.
Or data?
I don't think standardization we have to live with every country. And I should give you a short answer. I'm sorry to elaborate.
It's a lightning round. It's a very slow bolt of lightning, but
I've seen that in my past life at Swift, talking about standardization and collaboration and so forth. True, but you will never be able to ask India or China to change their purpose codes. So yes, we can have a field in a message for purpose codes, but it's just a field. Eventually, behind, you still have a long list of purpose codes, and what is complicated is to understand that logic and mapping of purpose codes. So I don't think the placeholder in ISO 2022 is that critical. I should have just said that.
Yeah, long answer, but there you go, lightning round.
I don't have any comments on that. I can't comment.
Hiro, then one new dashboard metric you'd expose to customers tomorrow.
Oh, that's a good one. I guess I want to think about it as well. Oh, well, we have this internally, but we haven't been able to build it out to our external customers. But it's the tracking of payments.
Yeah.
Damien. I was about to say the same. ETA and tracking. Yeah.
What is, Damien, what is the most overrated cross-border buzzword at the moment and the most underrated operational fix?
First, overrated, correct? In cross-border or payments in general?
Cross-border.
Standardization.
And the most underrated operational fix?
Account verification.
I knew that was coming.
Well, despite having spoken about stablecoin, I think stablecoin has been one of the more overrated buzzwords in cross-border payments. Underrated operational fix, automated reconciliation.
Along those same lines, what's one manual step that will still remain manual in 2026?
Treasury.
Damien.
Saying yes to a payment. I think we'll always want a human to approve, to say yes.
Great. Looking forward into the future, when we look at payments, say 5 years out in 2030, what will surprise us about payments, whether it be B2B, B2C, P2P? It's the one thing that you think will be unrecognizable 5 years from now, Hiro.
The type of payment or the rails will be invisible to the customers, right? For the customers, it's a seamless experience, no matter what you use.
Completely agree. 2030, I think we will have Gen AI payments. Mm-hmm. I think we will talk to a phone and say, send money there, or you take a screenshot from your WhatsApp, and then that's my payment.
Yeah. Do you think that we'll have the idea of least cost routing for payments as well? Because in my mind, there's speed, cost, certainty. Certainty has to be there all the time, but speed and cost, maybe I don't need my money to get there immediately, and I'm willing to pay less fees for, longer duration. Do we have that today? Do you think we'll have that in the future?
To a certain extent, we do already offer that as well, right? Let's say if you select the local payment route, it'll take a little bit longer, but it's a fraction of the price. Versus if you want to send it over a faster route, you get, let's say, for example, Swift. Well, we don't know if Swift is exactly faster, but you get, the Swift, the MT103s and other kind of tracking, GPI tracking that a customer may need, and that's a little bit more expensive.
Yeah.
So we do see that options available already to the stage. Maybe another one would be stablecoin, right? You want to send by stablecoin.
Yeah. Another option.
Yeah, I think it already exists to a large extent. So kind of different pricing and different associated to certain SLAs. But I mean, I see, so some of our customers in the Middle East, they've built a very smart optimization layer, right? So they basically are connected to most payment rails. And then for every transaction, they just get a quote, right, from the different payment rails, and then they channel it to the right one.
Mm.
So to Hiro's point, the customer doesn't need to care who's moving the money.
Yeah.
But they will always have the best one, basically.
Always have the best choice.
Yeah.
Last question for Damien. Let's start with you. I mean, for the people that are listening to this, the financial institutions, when they get into the office tomorrow morning, whenever that is, that they're listening to this podcast, what is the one thing that they should be thinking about if they are a product owner within the cross-border payment space?
I think working on trust. So focusing on how can they increase the trust that their customers have when they press send, especially in this environment with scam and fraud being everywhere.
Keep a tabs on what kind of players are coming up, right? Because I think a lot of the innovation that the current banks have when it comes to, for example, the QR code, I think that's a result of the challengers that are coming into this market, solving real pain points. Right? I think the banks may have, or the FIs may have gotten too comfortable, and all of a sudden somebody new comes in and starts chewing away on their lunch, and they're like, oh crap, we got to do something. So I think keeping in tabs on what's coming up and having a collaborative sort of mindset to work with those guys,
right?
Maybe something.
Thinking outside the box, I guess. Thank you both for your time today. This has been a great discussion. I learned a lot from it, which is always usually a successful podcast. So thanks for being with us today.
Thank you. Likewise.
Thanks.